Hey everyone, this is Kirk here again at optionalpha.com, and in this video I want to go over all the trades that we made for Thursday, May 28th. Now this video is really going to be pretty much a case study on how to enter an iron butterfly, and we're going to use FXI because I think it's a really good example of how we're getting back into this particular stock. We had really good success trading this last month and made a good amount of money on this same type of strategy, and we actually stacked a couple of these strategies right on top of each other last month. And so now we're kind of going back to the same pond that's been feeding us, really. So that's what we're going to talk about tonight in the video, is mainly this FXI, Iron Condor, or Iron Butterfly. So just the particulars on it. Again, we did this position just a little bit bigger because we want to scale into higher implied volatility, right? That's really our goal, is that when we get high implied volatility like this, we can't be shy about doing smaller position size. This is exactly when you have to be doing a little bit larger of a position size. Now, we did still leave room here that we can add to this position later on, which is ideally what we'd want to do. Since we're trading these out in July, they've got about 50 days to go. There's plenty of time to add to this position and build it up even more than this. But we're starting off with a fairly aggressive position size with 3 big iron butterflies in FXI. Now, again, it is an iron condor. That's how it's sent out in the alert system, but it's an iron butterfly because we basically have our short strikes on both the call and the put side exactly the same at 49. So you can see we sold the 49 call and we sold the 49 put. That means we're basically doing a straddle right over the market at 49. And then what we're doing is going out $5 on either end and buying those options $5 above and $5 below. And that gives us a risk-defined position that basically looks like a butterfly spread, your profit and loss diagram, but it's an iron condor or it's a straddle with buying the wings or protection, however you want to look at it. Now, in this case, we took in a very nice credit of $322 for each of these. So it is a very, again, high price straddle that we took in. So here's a look at the chart here of FXI to begin with. Again, the reason that we're going a little bit more aggressive is because implied volatility is up in the 70th percentile. So it's not only above that 50th percentile that we're looking for, but it's really much higher than that. It's in the 70th percentile, which it's only gotten there a couple times this year. And basically the stock has traded, more or less sideways every time it's gotten there. Now, again, last month we had really good success when it was up in the 80th and 90th percentile, trading implied volatility, and the stock basically traded sideways. So we're hoping for that type of similar movement right now, obviously, but who knows what's going to happen, and that's why we could add to this position. But stock had a big drop lower, was down almost 3.5%. Implied volatility popped higher. So again, what we did is we went out to the July strikes. These are 50 days out. And the reason that we did that is because June is just way too close at this point. June has about 22 days to go. Really, anything under 25 days, we kind of start really asking ourselves, is it really worth it to, go with that front month, taking a little bit less premium, have less time? And we always find that maybe going out just a little bit further gives us a little bit more premium, a little bit more time to see, a movement in our favor. So we went out to the July 50 strikes. At the time that we entered the trade, we had to play it just a little bit directional. We played it a little bit bearish just because of today's, move that it had. So we're just placing our short strikes a little bit directionally bearish at 49. And you can see we're selling the 49 on both ends. And then what we're doing is we're going out $5 and buying the 54 calls and down $5 in buying the 44 puts. So this gives us basically a $10 range in where our strikes are kind of positioned here, but taking in a nice credit overall. Now here's what our position looks like as far as potential profit and loss, and you can see at the peak here we should make about $950, and we're taking max risk of about $534. So for $534 of total risk, we have a pretty good window of opportunity here that we could see a profit, and it is fairly small. It's inside of kind of the expected move of the stock, but what we're looking for here is that quick drop in implied volatility. So we're not going to hold this position all the way until, hoping to see that, $900,000 profit. We're probably looking to get a couple $100 out of this trade and close it out well ahead of expiration, or at least that's the intention. So that's a pretty good walkthrough on the FXI Iron Butterfly, and again, a great little case study on that. Today we also were able to close out of our TLT, or part of our TLT Iron Condor position. We bought back the 131, 133 credit call spread, and also bought back the 117, 115 credit put spreads. And we bought those back for a 24-cent debit, took a $42 profit, basically buying those back for almost half of what we sold them for, basically continuing to keep it very systematic and targeted with what we're trying to do here. And TLT really is just, kind of traded sideways. Implied volatility has started to drop since when we sold these, so that's helped out. And more or less, again, the stock's traded sideways since when we sold this position. So really working out in our favor, both with the implied volatility drop and the stock more or less moving sideways. So we're taking money off the table. We've got a lot of time between now and expiration, but this is where starting to take those profits early or starting to manage those winning trades really pays off long term, is to get these win rates up by taking these trades early. So that's pretty much it today. Just two interesting little trades. Hopefully we should have some nice movement after hours in DECK, which is our earnings trade in deck that we put on a day early. Looks like after hours the stock is kind of all over the place, but should be inside of our expected range. So should have a nice couple $100 profit tomorrow for that particular trade. As always, if you have any comments or questions, please add them right inside the membership area. And until next time, happy trading.